About Microstrategy. On the surface, it's just a software company, but underneath all that, oh boy, it has become the single biggest battleground on Wall Street. We're going to pull back the curtain on the hidden trades and the massive, massive bets that have turned this stock into an all-out financial war zone.
Everything really kicked into high gear back in early February. And look, the stock didn't just fall, it absolutely plummeted, crashing down to its low for the entire year. But this wasn't just some random bad day. This was a declaration of war. Something huge was happening, just out of sight.
The story really starts with this number, 14%. That's the percentage of MicroStrategy stock that was being actively bet against. It's what traders call short interest, and it represented a multi-billion-dollar wager that this company was heading for a fall.
And that 14% figure, get this, it made MicroStrategy the most heavily shorted large company in the entire world. So you have to ask, right? Why? Why on earth did Wall Street's biggest and brightest decide to place their biggest bet against this one company?
Well, to find the answer, we can't look at the normal stock exchange. We have to go where the real money moves, into the hidden market. This is the world of dark pools. And yeah, it sounds a little sinister, but think of them as private VIP trading rooms for the big fish. We're talking hedge funds, huge institutions. They use these pools to trade enormous blocks of stock without tipping off the rest of us and sending prices flying. It is all about moving in stealth.
And check this out. This is the dark pool activity from the exact day the stock hit its low point. While the public market was freaking out, these secret trades were flying back and forth, one for $73 million, another for $65 million. I mean, just colossal amounts of money moving completely in the shadows.
And this wasn't a one-day thing. Not at all. A few days later, same story. Block after block of shares were tens of millions of dollars each, all being traded off the public radar. This was a sustained, absolutely relentless campaign.
And the sheer scale of it all was just staggering. By the middle of February, the size of these trades had just exploded. We are talking about single transactions of 78 million, 107 million, and then one unbelievable block for over $173 million. That's not just trading anymore. That's a firefight.
So what in the world was driving all this hidden activity? The answer is right here in the data. This column, the short volume ratio, it tells you that day after day, nearly half of all this massive, secret volume was coming from one group, short sellers, the people betting against the stock.
But, and this is the key, this wasn't just a bunch of traders with a hunch. No. This was part of a highly sophisticated, multi-billion-dollar arbitrage strategy. It's a famous play known as the basis trade, and it's actually pretty brilliant. Here's the deal. MicroStrategy holds a ton of Bitcoin, but its stock often trades at a premium to the value of that Bitcoin. Hedge funds saw a gap, so they would buy a Bitcoin ETF going long, and at the exact same time, they'd short MicroStrategy's stock. See, they weren't betting that Bitcoin would crash. They were betting that that premium, that gap between the two, would shrink.
And man, was this trade popular. MSTR's 14% short interest just dwarfed other heavily shorted companies like Charter and Coinbase. For a company this big, this was the most crowded institutional short trade on the planet.
But here's a fascinating little twist. Usually when a stock is this heavily shorted, it gets really expensive to borrow the shares you need to do it. But with MicroStrategy, the fee was dirt cheap, less than 0.5%. And why is that? Because the massive institutional holders, think index funds, were more than happy to lend out their shares and collect that fee as a little risk-free profit. They were basically supplying the ammo for the shorters.
But you know what they say? For every action, there's an equal and opposite reaction. While billions were piling up on one side of the boat, an equally powerful force was building on the other side. And that was all happening in the options market.
The options market for MicroStrategy was just electric, absolutely on fire. What you're looking at here is the options chain. On one side, you have the bullish call options, which are bets on the price going up, and on the other, you have the bearish put options, which bet on it going down. Millions of these things were trading every day. It was pure speculative frenzy.
And right in the middle of all that chaos, market watchers spotted something that made everyone's heads turn. A single, highly aggressive and very unusual bullish bet. Someone was betting big that the stock would soar past $200 a share within the year. And this wasn't some small-time lottery ticket. Whoever made this bet laid out $1.3 million in cash for one trade. That is an enormous display of confidence, a powerful statement that the shorts were completely, totally wrong.
Of course, all the biggest names on Wall Street were in on the game. You had Jane Street massively upping its stock holdings, and at the same time, giants like Susquehanna and Citadel had these huge put positions. But here's the thing, for them, these weren't just simple bets on the stock falling. They were mostly hedges, a kind of insurance for their other complex trades. It just shows you how interconnected this whole battle had become.
So what do you get when you smash these two forces together? On one side, a massive institutional short-selling campaign. On the other, a powerful speculative options frenzy. You get what analysts call a compressed spring. And this timeline just reveals the company's insane core strategy. While its stock was under attack, did Microstrategy flinch? Nope, it just kept buying more Bitcoin. Its 97th purchase, 98th, 99th, and then a historic 100th purchase. They were just using all that market chaos to double down on their own bet.
This unwavering conviction came at a jaw-dropping paper cost. At the end of February, the company was sitting on an unrealized loss of nearly $7 billion on its holdings. For almost any other company on Earth, a loss of that size would be, well, it would be game over.
Which brings us right back to this idea of the compressed spring. The downward pressure is the short sellers. The upward potential is the option speculators and the company itself. These two forces are just squeezing the stock from both sides, creating this incredible explosive tension.
And that leaves us with the final, critical question. Something has to give. That spring is wound as tight as it can possibly get. So the question really isn't if it's going to uncoil, but when, and which direction it's going to fly.